U.S. stocks closed their worst quarter since 1970, and Fitch downgrades global sovereign debt to neutral. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. U.S. stocks fell in volatile trading at last night's close, wrapping up their worst first half of a year since at least 1970. With the S&P down roughly 21% so far in 2022, the last time the stock market declined by that magnitude was in the first 6 months of 1970. But stocks reversed losses later that year and gained 26.5% over the following 6 months. The market turmoil in 2022 has been widespread, with cryptos like Bitcoin crashing over 50% and big tech stocks plummeting. Fitch has downgraded its view on global sovereign debt to neutral from improving due to concerns over rising international borrowing costs and a potential series of new defaults. Fitch says Russia's war in Ukraine induced higher inflation, trade and capital flow disruption, and slower economic growth, impacting sovereign credit conditions. Most of the more than 100 governments that Fitch covers have either brought in subsidies or introduced tax cuts to dampen the impact of the soaring inflation. OPEC Plus says it's sticking to its previously decided output boost, despite calls for bigger increases to tame crude prices. In their monthly video conference, the 23 members agreed to add another 648,000 barrels per day in August, the same as for July. Analysts say this could add an element of uncertainty to future targets, particularly given recent reports that even Saudi Arabia and the UAE are running near capacity. Ukraine has started exporting electricity to the EU via Romania as Russia reduces gas supplies to the bloc. President Zelensky said this is only the first stage as Ukraine prepares to increase supply, and a significant part of the Russian gas consumed by Europeans can be replaced. He said it's not just a question of export revenue for Ukraine, it's a question of security for the whole of Europe. The Ukrainian electricity grid was connected to the European network in mid-March, helping to keep supplies flowing despite the war. Confidence among Japan's largest manufacturers sagged for a second quarter on rising costs and supply constraints, but the service sector was boosted by economic reopening. The Bank of Japan's closely watched Tenkan survey showed confidence among large manufacturers at +9. That's below expectations of 12 and sharply lower than the 14 registered in the March survey. A positive figure means more manufacturers see business conditions as favorable than those that consider them unfavorable. The World Bank's board has approved the creation of a fund to finance investments in strengthening the fight against pandemics. The fund will support prevention, preparedness, and response with a focus on low and middle-income countries. It will be used in a number of areas, including disease surveillance, with more than $1 billion in commitments already announced. The bank says the devastating human, economic, and social cost of COVID-19 has highlighted the urgent need for coordinated action to build stronger health systems and mobilize additional resources. Serie A has accepted Abu Dhabi Media's offer to broadcast the Italian league in the MENA after more than a year without a broadcaster in this region. For the next 3 seasons, Abu Dhabi Media will have the rights for a minimum total amount of $79 million. In the absence of a satisfactory offer in its call for tenders last year, the Italian league has developed its own YouTube channel in Arabic to offer matches free of charge. 16 live golf players have reportedly written to DP World Tour asking it to rescind its fines and allow them to compete in next week's Scottish Open. The golfers were banned from 3 upcoming DP World Tour events and fined $121,000 each after playing in Live Golf's opening event in London. The letter read, "Instead of spending our time, energy, financial resources, and focus on appeals, injunctions, and lawsuits, we would implore you to reconsider your recent penalties and sanctions." I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.